The Reserve Bank believes the key source of competition to banks in the home lending market may never recover to where it was before the global financial crisis. Assistant Governor Guy Debelle has told a conference in Sydney that the securitisation market is showing signs of life, but is continuing to be adversely affected by poor investor sentiment caused by the ongoing sovereign debt problems in Europe. Andrew Robertson reports.
Bundling home mortgages together and then selling them to investors was the lifeblood of smaller financial institutions prior to the GFC hitting in 2008. In 2007, securitisation accounted for well over 20% of home lending. Now it's less than 10%.
The investor base for asset-backed securities is substantially narrower than prior to the crisis. So we should not expect it to get back to that share of the market that it was in 2007 anytime soon, if ever.
At its peak, the market for residential mortgage-backed securities was $50 billion. It plunged to around $10 billion in 2008 and is now at around $18 billion. However, that figure was only achieved by government buying of securities to help stimulate the market. It's a program Dr. Debelle says has great merit.
It can be easily tailored to help specific types of institutions. It can be phased out easily. The likelihood that the government loses money on its investment is very small, and there is no ongoing contingent liability to the government from providing the support.
Also speaking at the conference on securitisation was the head of structured securitisation from Lloyds Banking Group in Britain. He's also a fan of the federal government's attempts to keep the securitisation market functioning.
I think there is a point in time where they will probably have to or want to pull out of that market and let spreads go to whatever the natural level is. But clearly that will have an economic consequences for the end consumer. So again, it's really a political decision. But I think generally the expressions of support from the government here, which are similar to what's happened in the U.S., has been great.
Many people are yearning for the securitisation market to get back to where it was before the GFC to provide real lending competition for the big four banks. However, both Guy Debelle and Robert M. Plen believe that 20% level of securitisation was unsustainable. Guy Debelle telling me after the conference that 20% market share is not needed for securitisation to be a competitive force. However, one of the biggest issues for the securitisation industry is to stop its current reduced market share from falling.
And a rough calculation suggests that today, annual gross issuance of around 25 to 30 billion would see securitisation maintain its current share of housing credit,
which is up to 2/3 higher than current lending. And while a healthy securitisation market may provide competition for the big banks, it will also provide some protection for them, something which occupies the mind of ratings agency Moody's.
Well, we think it's a useful source of funding diversification. As you know, the Australian banks are very heavily reliant on offshore wholesale funding to fund their balance sheets. And anything that can provide a different set of investors is going to be very useful to them.
That concentration on wholesale funding is one of the main reasons why Moody's has a negative outlook on the AA credit rating of all four big banks.